Hello guys, welcome to another trade breakdown video. Today I'll be breaking down the trade that I took on Monday while I was backtesting, which was on 15th of July 2024. As you can see, it is giving us a 3 white soldiers, as we know the candlesticks because we have studied about that. It is called a 3 white soldiers whenever 3 bullish candles prints itself consecutively like it did in this trade. And there was a fair value gap here, you can argue, but obviously I trade with the trend. I'm a pro trend trader, so I was looking for buys on Monday. Okay, so my weekly bias was also bullish on the GBP USD, and on the XY it was bearish. So also it made sense. I trade Monday. I have a rule. I trade Monday whenever the weekly and the daily bias are clearly showing to me one direction. Like weekly is clearly bullish, and in this case daily is also bullish, so I am looking for buys on Monday. Okay, and according to how this candle closed right here, a huge bullish candle on Friday, we can see only buying happened. So obviously on Monday I will look for buys from the closest zone. From the closest zone, it can be M15, it can be M30, I don't care, from the closest zone. Or also we can look for some Asian range, Asian liquidity sweep model without any zone, whenever the market closes with huge volume right around here. I will show you that worked perfectly in this trade, in this example. And on DXY I am looking for the contrary, which is looking for sells. Yes, there is a fair value gap. Yes, the market is in a demand, it can go up, but obviously I don't trade that. I trade with the bias, so my bias now is bearish, so I am looking for sells. So going on GBP USD, on the 4-hourly time frame, I will look for some sort of change of characters, demand or fair value gaps. So on the 4-hourly, I can spot this demand zone, this fair value gap right around here. And if I draw the Fibonacci retracement tool here, why are you drawing the Fibonacci retracement? Due to this low here caused a break of structure, and whenever a change of character or break of structure is happen on the market, we draw the Fibonacci retracement to see the retracement, which retracement is valid. This yellow line represents the equilibrium, which is the 50% retracement. The red line represents the 61.8, and the blue represents the 78.6% retracement. The steeper it does the retracement, the better. But in this case, obviously I'm looking for buys from a closed zone because of how the Friday candle closed. So I waited for the Asian range to close, because we always wait for the Asian range to close. Without the Asian range closing, we can't do nothing. Our strategy is purely based on the Asian range. So what happens here, what happens here, what happened here, what happened here, I don't care. I only care when my time window appeared in the market, which is London Open, which is 7 to 10 AM UK time. Okay, so the Asian range closed something like that. The market opened a huge gap down on GBP USD, and if I go to Euro, on Euro you can literally see this gap right here, right? So we can also target that gap to fill, because the market, whenever it opens gap up or gap down, it is very high probability to go and fill up that gap, because I have seen it a gazillion of times. I am in the markets now for almost 8 to 9 months. I have a lot of experience now. It's not ego, I'm not arrogant, but I'm genuinely speaking, I've seen this move happen a gazillion of times, and literally keeping that in mind. And also on DXY there was a gap down, sorry, gap up, so it made sense to fill up that gap on the hourly time frame. And also my bias is bearish, so we'll target the previous day low in DXY and the previous day high on GBP USD. So going on GBP USD, I wait for my timing to occur. And do you remember one thing? The momentum was very high, so I am looking for the closest zone, as I have told. So there is no clear zone, and also the market tend to give us continuation model whenever there is no sort of clear zone. For example, we are looking for buys, yeah, but on Monday I'm looking for buys. On Friday, Thursday, we didn't got any sort of clean demand zone. That is when, not sure, obviously nothing is sure in the markets, but there is high probability of we getting a continuation model whenever there is no sort of demand, no sort of clean zones. In this example, you can see this was the PPI day. I clearly remember last week this was PPI news, literally headed toward the upside. You can argue this was the demand zone, but this demand zone was very, very tricky, and this was also already taken out from this Asian range, so it was very, very tricky to trade, right? So that is when I waited for my timing to occur on the market, which is I watched the markets from 11:30 PM Indian Standard Time on the daylight saving, which is 7 AM to 10 AM UK time. So this is when my session started, literally like 1 hour before London session open, which is 8 AM. 7 AM the market went down, gave us a fake move to the downside, right? And then literally it showed us huge buying pressure right around here. but I didn't enter the market because obviously I wait for the London to open, and also there was a very high probability to go and take the Asian low before sweeping to the upside. Yes, the momentum was very high and I am looking for a closed zone, but obviously until and unless the Asian range sweeps, my model doesn't appear, right? So this was a B setup. This was a B setup. This comes in the this trade is literally in the continuation setups trade. As you can see, I have taken this trade on London session, which is our session. I enter with the momentum. Literally the market went to our direction without any drawdowns, zero drawdowns. As you can see, I entered exactly at my timing, which is 12:30 Indian Standard Time and 8 a.m. UK time, right? Literally beautiful trade, and it was so high probability, like it was so certain. And if I'm buying, I will target the previous day high. As you can see, the targets were also so clear. And yeah, this is a B setup, not one of the highest probability trades, but yeah bro, it worked. So obviously I will journal this, and in the live markets, if something like this happens, I will take it confidently because I have seen it played out and I will believe in it, right? So there was also a huge amount of liquidity here, equal highs. This liquidity here are called equal highs, as you can see. So it was also so certain that the market is gonna go and take this equal highs due to liquidity purposes, and also there was no sort of zones, and it was a beautiful demand zone right here, right? So if you miss this trade, right, there is a chance that okay, I will not take this trade because my Asian low didn't get swept, and so on and so forth, right? If you had done that, then what you could have done is you could have waited for New York session. This is the London move. So usually whenever London makes the move, New York we don't trade, right? If you didn't caught this move and you wanted to be a part of this move, what you could have done, literally pre New York session, as we can see, which starts at 4 p.m. Indian Standard Time, it gave a fake move as expected. Pre New York, most of the times it tends to give a fake move to sweep liquidity. As you can see, it did exactly that. It induced the position, induced the pre-New York buyers right here, and then the main buying happened here on New York session, which is 6 p.m. Indian Standard Time. And also it was M15 demand mitigation, a beautiful bullish candle, bullish rejection from here, and this was hit, and the rest was history, bro. And now instead of targeting the previous day high, now I will target this high right here on here, and literally I targeted a 1:3 risk to reward. It played out to the T. Literally this trade was so beautiful. I had to journal this trade. As you can see, if you follow your time window and you only trade in your time windows like this, your probabilities of winning becomes so high right here, right? I traded on London Open and New York Open at my time window. Like, I have given certain time window to myself and I only trade between those zones, and if I do that consecutively and I manage to only take trades in my session, bro, it's gonna literally work, bro. I have seen it work a gazillion times, and yeah, I'm gonna do that, only take trades in my time window. And I've also journaled this trade if I want to come back and watch what mistakes I've done or what I could have done better. So yeah, journaling is what gonna make you profitable, so keep doing it, and yeah, apply it in the live markets.